How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by this channel for the first time, please, 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 please subscribe, right? I'm out here every day talking about financial freedom. So if you're in the market for financial freedom, you came to the right channel. Hit that like button for me as well. Please hit that like button as soon as you start watching this video. Just hit the like button. It only takes you a second. It would mean the world to me. It would also give us the opportunity to get this video out to more people. So if you guys could please tap that like button for me as soon as you start watching the video, I really would appreciate it. It goes a long ways. Thank you very much. If you want up to 12 free stocks from Webull, they're going to give you up to 12 free stocks for just trying out their brokerage account. When you put any amount of money in that new brokerage account, they're going to give you up to 12 free stocks. Now, there's a link down in the description box of this video. Go click on that Webull link, open up your new Webull account today. Go get that free stock, go get that free money. I also use Webull self-directed brokerage app every day to transact business for my paper assets portfolio. Now, again, there are many other companies out there. You're more than welcome to take a look at Webull and then go take a look at some others. But if you're gonna rock with me, then I choose Webull. So you gotta make your choice, but link down in the description box. If you want up to 12 free stocks for just trying it out, go get it. Then send me an email. Let me know you opened the account, you funded it. I'm gonna send you a free Webull tutorial video to walk you through how to use the Webull app to make your first trade, right? Like I said, just send me an email. Now, my email address is down in the description box of this video. Just go down to the description box, expand it, scroll up, and then boom, you're gonna see my email address. It's RF Financial Consulting is the name of my company, and the email address will be right underneath that. Send me an email if you want that tutorial video once you open your Webull account. The greatest wealth transfer in American history is coming. And here's what I'm gonna be doing. That's what I wanna share with you guys for this few minutes I'm gonna spend with you on this video. Now, some of y'all might ask, well, Richard, why is it the greatest wealth transfer in American history? Well, if you have noticed this week, what has been happening in the stock market? S&P 500 has bounced back to 4,500 points, right? But that ain't even the good news. NASDAQ, I'm talking about, is a hair under 15,000 points, guys. In the Dow, a hair under 35,000 points. Why is the stock market bouncing? Why is this the greatest wealth transfer in American history? I'll tell you why. The Fed met November 1st, a couple weeks ago, and decided they were not going to increase short-term interest rates. Now, I'm going to go on the record and say the Fed will not increase short-term interest rates anymore. They're going to be meeting in December, middle of December, around December 12th, 13th, something like that. That's not etched in stone. You guys go out and fact check that, but they'll be meeting in the middle of December. And in that meeting, they're not going to rate hike either. The reason they're not going to rate hike, guys, is they've already been told that they're done rate hiking. And the market knows that. See, these institutional investors, these big hedge funds, these billionaire investors, they make up 75% of the stock market, right? People like you and I make up about 25% of the stock market when it comes to investing in paper assets. The reason you're seeing the bounce you're seeing, because the market knows something that a lot of us don't know. See, the market knows the Fed is done increasing short-term interest rates. So now is the time to buy, while you still can get these great companies, these great ETFs, these great index funds at a discount. Yeah, that 75% of the volume that is turned over in the stock market is by these big, gigantic hedge funds, institutional investors, billionaire investors. They know something. That's why you see in the little bounce. As retail investors, we should be paying attention, or at least me, I'm going to pay attention. Because see, the market is not bouncing right now for no other reason than they know something. They know something. And that something is interest rate hiking season is over. It's done. In my opinion now, I'm no expert here, guys. I'm giving you my opinion. This is an opinion channel. This is not a convince you channel. So if you don't agree with my opinion, that's okay. All I can tell you to do is you come to your own conclusion then. But I'm telling you what's getting ready to happen. This great wealth transfer is going to be taking place over these next 2 years. Because what's going to happen is the Fed is going to pause for about 6 months. And when I say pause, stop rate hike, they're just not going to do anything. They will meet, they will look at data, they will have, discussions with reporters, they will have discussions with the American people, but no more rate hikes. And then what you're going to see is around June of 2024, you're going to see them start reducing short-term interest rates. And I've already told you guys, the Fed controls the money supply with short-term interest rates. When short-term interest rates go up, the money supply is turned off. When interest rates, the short-term interest rate goes down, the money supply is turned on. And that's what they're going to be doing around June of 2024. They're going to start turning back on the money supply. The question is, between now and June, what are you going to be doing? Are you going to just sit on the sideline and listen to all the 1% propaganda about it ain't time to buy yet? It's not time to buy yet, guys. Stay on the sideline. We'll let you know when it's time to buy. And the reason the 1% are going to be saying that is because over these next 7 months, they're going to be buying. Because they know once the Fed starts slowly reducing short-term interest rates, you think the stock market is doing well this week. It's going to consistently be like that. And who knows, guys? You might see a Dow at 40,000 points. You might see the S&P at 6,000 points. You may see the NASDAQ over 20,000 points. Now, again, I don't have a crystal ball and I can't give you a guarantee that will happen. All I can tell you is what my opinion is, right? But my opinion is over these next 7 months, there is an opportunity to really build some wealth. If you believe paper assets is the right investment for you to build your wealth to get yourself to financial freedom. You got to make that determination. I can't make it for you. In my financial freedom journey, paper assets have been extremely instrumental in building my wealth. I remember the last great opportunity to build wealth was in 2008 when we had the Great Recession, real estate debacle. And 2009 rolled around, 2010 rolled around, and then 2011 rolled around. So we had about 3 years of just not good opportunities when it comes to paper assets, right? Paper assets were really, really, really down. A lot of people looked at that as bad. I personally looked at that as a great opportunity to build wealth. So I started gobbling up as much as I could afford to buy in 2008, right? And I just held them, and I'm still holding them. And I've really increased my net worth quite a bit because I didn't wait on the sideline until the 1% propaganda machine told me it was time to buy. See, that's the pitfall of a lot of retail investors. They get their information from mainstream media, and mainstream media is controlled by the 1%. So the 1% is really pumping in this propaganda through the mainstream media, and they tell you, no, 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 don't buy. And over these next 7 months, that's what they're going to be telling you. You're going to be hearing this a lot over the next 7 months. Don't buy yet. It's not time yet. We'll tell you when it's time. Now, soon as the Fed start reducing short-term interest rates sometime around the middle of next year, then you'll start hearing their story change. It won't be don't buy. It will be, okay, now it's time to buy. But at that point, they've had 7 months to buy assets at a discount. Now they're ready to sell. And they use retail investors in order to exit their positions at a great profit. So I'm giving you my opinion, guys, on all of this. This is not coming from anybody else other than me, right? I don't have a CFP. I'm not a financial advisor. I'm just a guy who's been doing this for 25 years and have won more times than I've lost. Why? Because I just follow the 1%. See, I'm no genius. I'm not a really smart guy. I just follow the 1%. See, I'm smart enough to know how the 1% move and how they manipulate us. All I'm telling you is, if you want to build wealth, you got to make a decision. You got to make a decision either to stay on the sideline or get yourself off the sideline. That's up to you, right? You got to make that call, though. You got to make that call. But I can tell you, in these next 2 years, what a great opportunity it's going to be to build wealth. I think it's a great opportunity in 2 of the big 3, right? The first of the big 3 is paper assets, like I said. There's an opportunity through paper assets to build wealth. Why? Because they're discounted. I just told you that the NASDAQ is a hair under 15,000 points. S&P is back up to 4,500 points. And the last time I looked today at the Dow, it was like 34,900 points, almost 35,000 points, guys. That's just a precursor, though. That's a precursor to what's coming. And the only reason you're seeing that kind of activity in the stock market is because what? The 1% know something. And the 1%, like I said, are controlling 75% of the volume in the stock market. See, they know something. They know something's coming. So why are they, if we're getting ready to go into this deep, deep, deep recession like everybody keep talking about, why then is 75% of the volume being done in the stock market by billionaires, hedge funds, institutional, why are they now why are they doubling down? Why are they putting money into the stock market? That's the only reason it's up. Why are they doing that? I would say they're doing it because they know something's coming. I would say they're doing it because they're trying to say, okay, we've been on the sideline for a little bit. Let's jump back in, buy these assets, and we're going to keep buying them over the next 7 months. And then once the Fed starts reducing, then at that point, we will tell the 25% or the retail investors, this is the right time for them to jump in. And guess what's going to happen? A lot of people will jump in not really knowing what's happening, but because their neighbor said to jump in, because a coworker said to jump in, they heard some talking head on one of the major networks say jump in, that they heard their favorite YouTuber, their favorite Instagrammer, their favorite TikToker say jump in, so they're jumping in head first. They don't even know how deep the pool is. They just jumping in head first. See, at that point, you've been manipulated, right? You've been manipulated. Because at that point, the wealth opportunity that I'm talking about is pretty much gone. I'm talking about the real wealth opportunity. Now, don't get me wrong, through dollar cost averaging over a long period of time, that's wealth opportunity as well. But I'm talking about for those of you who are saying to yourself, okay, I done been on the sideline. I got this money in my savings account, or I got this money in a CD, or I got this money in a money market, or I got it in my my vault at my house. I got it in my cookie jar and the back of the kitchen cabinets, wherever you keep your money, right? But not in the market. You ain't got it in paper assets right now, right? You're waiting. You're waiting. Somebody told you to wait. Maybe somebody who is reputable, you believe is reputable, told you to wait. Guys, I'm telling you, listen, I'm not waiting. You do whatever you want to do. I'm not waiting. I'm getting ready to take a sizable amount of money and double down. Remember videos way back, I told y'all I keep 25% of my net worth in cash. This is why. Right now, times just like now. Now again, I'm not telling you need to do anything. I'm telling you what I'm doing. I'm telling you why I'm making a case for myself to start jumping back in heavily. Now, I've been dollar cost averaging over the last, I've been dollar cost averaging forever, right? The last time I made a big move like I'm getting ready to make now, the last time I made that big move was what? September 2020. I made a $250,000 move in September of 2020. I put $250,000 in VGT, Vanguard Information Technology VGT. That's the last major move I made. Now, I've been obviously dollar cost averaging in, but not like this major. I'm talking about $250,000. I made a big move. And I held that investment for 3 years and made a 30% return on my money, right? So that money, about $350K, has been sitting in a Vanguard money market account, earning about 5.25%. Just waiting to be deployed. Now, I know a lot of y'all are like, well, hey, why are you trying to time the market? I'm not timing the market. Remember, my whole point here is you should always be invested. But you got to understand that $350K is a small part of my investments, right? Everything else has always been in the market. And this was in the market as well up until about a month ago. I rolled it out because it had reached its target price that I wanted to sell it. Remember, I told you guys I have a target buy-in and I have a target buy-out, right? I got a target exit, right? And my target exit on VGT, well, my target buy price was $317, which was in September of 2020. I bought VGT at $317 a share. That's what was my buy-in, right? And I just held it. I missed my first exit. My first exit should have been December 2021, but I got greedy. My first exit, VGT was trading at $460 a share, guys, in December of 2021. That should have been my exit, but I got greedy. And my greed cost me probably 50 grand. It did. And it also, I had to stay in the investment because what happened was, you guys know, as soon as January 2022 rolled around, the Fed started increasing short-term interest rates. And guess what happened to the stock market? I keep telling y'all guys, when they increase short-term interest rates, stock market goes down. That's exactly what happened in 2022, January 2022. If you go back to December 2021, S&P 500 was trading at $4,700. At 4,700 points, not $4,700, 4,700 points. I mean, it was crazy. VGT was $460 a share. And I bought in at $317. Got greedy though. Fast forward, January 2022, Fed start increasing short-term interest rate. VGT did what? Went down, right? So I said, okay, don't panic, no panic. Just hang in there, which I did. I said, okay, hang in there, get the dividend. Go ahead and get the dividend. which I was collecting the dividend and reinvesting it back into more shares. And I said, just be patient. You'll get your exit opportunity in 23. Because I knew 22 at that point, when they started increasing short-term interest rate, I knew 22 was gone. There was no exiting for me in 22 because I knew the stock market was going to be down. I keep telling you, short-term interest rates go up rapidly, stock market goes down rapidly. Short-term interest rates go down, stock market goes up. That's what's getting ready to happen right now. So back to my story about VGT, I said, okay, 22, all I can do is stay in the investment, take the dividend, and then in 23, my opportunity is going to come again. Sure enough, around August 2023, VGT goes up to around $440 a share. I almost got greedy again. Then I said, nope, you ain't gonna get greedy this time. It's at 440 today, but if it goes down to about 420, you exit. And that's what I did. I exited around 420 and made $100 per share on my investment, which equated to about 100 grand. Just on a 3-year hold, doing nothing, just leaving it in there. I would have made about $150,000 if I would have got my butt out in December of 2021 like I should have. But that's me just getting greedy, right? That's why I keep trying to tell you guys, have you a buy-in price and have you an exit price. And when you hit your exit price, get on out, right? I didn't follow my own advice, and I had to stay in the investment for about another extra year, but I knew it would bounce again, right? Why? History tells me it would. When you look at the historical return of VGT, you can tell it might go down, but it'll bounce back again. Why? You got the top 375 information technology companies in the United States in that fund. I'm talking about big boy heavyweights like NVIDIA, and you guys know what type of run NVIDIA's been on over the last couple of years. Matter of fact, a year and a half maybe. I mean, listen, 2022 NVIDIA was damn near $100 a share. Fast forward to 2023, it's over $400 a share. And that's one of the heavyweights in VGT. So my point is, I'm getting ready to do this again because the writing's on the wall. I keep telling y'all guys, when interest rates go down, stock market goes up. So if interest rates are high right now, Fed funds rate is 5.5. That's the Fed funds rate. You already know the 1% done gave it away, right? They done gave it away. And the reason they gave it away is because they started buying already. Why you think the stock market is jumping, guys? It ain't because of retail investors. I can promise you that. It ain't because of retail investors. It's jumping because of institutional investors, hedge funds, billionaire investors. The upper 1% of the wealthiest people in this country are buying right now. That's why it's bouncing. But if we just pay attention to that and say, well, goodness gracious, now, why is the stock market bouncing? That's why. And the reason it's bouncing is because when the Fed met on November 1, guess what the odds were that they would not increase short-term interest rates? It was almost 90%. 90% of experts said they would not increase short-term interest rates. And guess what? They haven't. Guess when the last time they increased short-term interest rates, guys? Somebody tell me. When was the last time the Fed increased short-term interest rates? When? July. July was the last time they've increased short-term interest rates. So let's do the math here. August, September, October, November. 4 months since they've had a rate hike. Now, why is that? Why don't you think they've had a rate hike in 4 months? I'm gonna give you my opinion. Now, I'm not saying this is scientific. I'm not telling you my opinion is the only opinion, but I'm gonna give you my opinion where they haven't increased short-term interest rates in 4 months. Because the 1% already done gave them the marching orders. I keep telling y'all that. The 1% control what goes on in this country, especially the money. They've already told the Fed, listen, we're done. You're done. 5.5 is high enough. I don't care what you tell the American people. 5.5 is high enough. That's why they haven't bumped in 4 months, and they're not bumping anymore. So you fast forward to what? Wednesday. October CPI report came out. Guess what that did? Even more, it convinced me that the Fed is done hiking. Why? Because core inflation and headline inflation came down from the previous month. When you look at it on a year over year, right? Headline inflation in September was 3.7. Headline inflation in October was 3.2. Core inflation in September was 4.1. Core inflation in October was 4%. When was the last time core inflation has been 4% or less? Can somebody tell me that? When was the last time? When was the last time? I want to say it was somewhere mid 2021. That was the last time core inflation is under 4%, guys. I'm telling you guys, all the writing is on the wall. At least for me it is. The last time core inflation was that low was in the middle of 2021. That's why the Fed ain't bumping anymore. They're done. Their job is done. Their job with inflation is done. Now the 1% tells them it's time to get back to making some money. But what we're going to do is, before you start reducing, give us 7 months to buy the paper assets as cheap as we can get them. Give us 7 months. Give us until June of 2024, and then we will allow you guys to turn back on the money supply. We will allow you to start reducing short-term interest rates. And when that happens, guys, let me tell you, that's where the wealth is going to be built. Personally, for me, I'm buying mine now. So when June rolls around and that money printer turns back on, they start reducing short-term interest rates. This money I'm getting ready to put in, I'm talking about this extra money I'm getting ready to put in. I'm not going to double it because I'm going to be putting it in VGT. I'm going to be putting it in VOO. Those are my two I'm going to be putting it in. I ain't putting it in nothing else. I've already did my investment in Tesla, and I'm already doing the Magnificent Seven, so that's done. I'm not doing any individual stocks because I'm already doing that through the Magnificent Seven. But for ETFs, oh my goodness, I'm going to be looking at VGT and I'm going to be looking at VOO. Those are going to be my two. Because see, I believe even though VGT is trading in that 4-something range right now, and again, guys, I don't have no crystal ball and I'm no expert here, right? I'm just giving you my prediction. I'm just giving you my opinion. I can see VOO, I can see VGT being somewhere north of 550 per share. That's what I can see, especially when the real bull run hits. It won't be there in June of 2024, but I'm buying now, right? I'm buying now because I don't believe it's going back to 300 anytime soon. There ain't no 300 for VOO or VGT, not 300, not below 300. I can see it fluctuate over the next several months, somewhere between, I'm talking about VGT, somewhere between 400 and let's say 445. I can see it fluctuate back and forth. But my thing is I'm gonna go ahead and grab mine because I think if I can hold it 3 years, like I did the last time, I think it'll trade somewhere north of 550. And if I can make $100 a share over the next 3 years, that's good enough for me. That's good enough for me. Right? That's good enough for me. So that's the strategy. The strategy is to buy VGT and to buy VOO. And then I'm gonna hold those two ETFs for 3 years with this reserve money or this extra pile of money that I got sitting in the money market account over at Vanguard. And it's sitting in the money market because I was waiting for the right time to redeploy it. And I think this is gonna be the right time. Now, will the market over the next 7 months have a sell-off from time to time? Of course it will, because we're still in a bear market. We still haven't gotten back to the bull market. So of course it will it will sell off from time to time. I understand that. I'm okay with that. I'm prepared for that, right? I've been through that. But I know this, that the Fed has done, in my opinion, again, guys, not scientific, don't have any factual proof of this. I'm just telling you my opinion. My opinion is the Fed has done rate hiking. My opinion is, based on everything I've heard, listening to the Fed chair, researching, tells me the Fed will start reducing short-term interest rates in June of 2024. So somewhere between now and June 2024, I'm going to be gobbling up VGT and VOO. Now, precisely when I buy it, guys, I'm going to tell you, that's going to be a gut feeling for me. There's nothing scientific about it. There is no, well, I looked at the 25-year history. None of that. I ain't that deep. I'm going to wake up. I'm going to be looking at what's going on. And I'm going to say, today is the day. Today is the day, right? Now, if I can get VOO and VGT under $400 a share at any time in these next 7 months, I'm buying it. So I'm hoping I can get it under $400 a share. Right now, that's not in the cards because it's over that. But who knows? In December, typically, a lot of times people are starting to take profits off the table in December before the end of the year. Maybe there's a little sell-off somewhere in December. I don't know. Maybe there's a little sell-off and I can grab both of them under 400 a share before the end of the year. So I'm a wait and see. And again, guys, not trying to time the market because I'm already in the market. All of my money, 75% of my net worth is in the market all the time. I'm dollar cost averaging in every single month. But I do have a patch of money over here that's been sitting there, right? That's the difference. A lot of people, I thought were you timing the market? No, I'm not. I'm making an investor decision. I would be timing the market if I had none of my money in the market right now. That would be timing the market. I'm not timing the market. My money has been in the stock market for 25 years, compounding. Every single day, every single week, every single month, every single year, every single decade. It's been compounding for 25 years. So I'm not timing the market. I'm not timing the market. I'm already in the market. But if I have extra reserve money that I've already made $100,000 on, and I'm getting ready to make another 100 or two on it, that's okay. If I want to wait and cherry pick my time to go in, I'm okay with that because that's not the largest part of my investment. The largest part of my investment stays in the market 24 hours a day, 7 days a week, 365 days a year, right? That's my strategy. What is your strategy? What you gonna be doing? You gonna sit around and wait on the 1% to tell you when to buy? Is that your strategy? And now I know some of y'all are saying, well, I'm not a paper assets guy. How else can I build wealth? Well, start a business. When is the best time to start a business, guys? When nobody else don't want to start one. Less competition. That's the best time to start a business. When is the best time to start a business? In volatile times, in a recession, in a down economy, in a high interest rate environment, right? And I know a lot of y'all will say, well, it ain't a recession. Well, for some people it is. Now, it might not be for the top 20% of wealthiest people in this country, it may not be a recession. But I guarantee you go talk to some of these lower income folk, some of these middle class folk, and ask them, is it a recession in their pocketbook? I guarantee you they'll tell you it's a recession. I'm just telling you. So y'all getting fooled by the upper 1% of the wealthiest people, they fooling y'all. They telling y'all, oh, there ain't no recession, you're doing great. Okay, go talk to somebody who living paycheck to paycheck. Go talk to somebody who can't make ends meet. They can't afford to pay their rent. They can't afford to pay their mortgage. They're being strangled financially by credit card debt. They just now got their first student loan bill because they've turned back on the interest on student loans as of October. Go talk to one of those folks and ask them if this is a recession. Go talk to these folks that say they're not happy with where the economy is right now. Who do you think that is? That ain't the upper 20% of wealthiest people in this country, guys. That's everyday hardworking folk who are not happy with this economy, because this economy, although everybody says it's great, is not great. We got $1.3 trillion in credit card debt in this country. How can that be great? We got $1.6 trillion in student loan debt in this country. How can that be great? We got $1.5 trillion in auto loan debt. How can that be great? I don't know how that can be great. We got hardworking Americans who want their slice of the American apple pie. They want their beautiful little house with their white picket fence. They can't participate at 8% interest rates, guys. How can that be great? You see what I'm saying? All this great. No, not based on some dumb statistics I just gave you. 100 million Americans ain't even got no money in retirement savings. How can that be great? We ain't got the 350 million people in this country, including kids and old folk. How can that be great? How can 62% of Americans live paycheck to paycheck? How can that be great? So our economy is not doing great. It's doing great for the wealthy, but for the lower income and the middle income folks, it's not doing great. It's doing terrible. So all I can tell you is someone is going to take advantage of this opportunity. I'm going to be one of them. I'm going to take advantage of this opportunity because I'm just following the 1% here. See, I know their tactics and their tricks. The stock market, what did the stock market bounce? Well, that's a complicated answer. No, it ain't. It ain't complicated. It ain't a complicated answer. 1% investing again. That's why. They're buying assets. They're buying paper assets. They're buying companies. They're buying shares in companies. They're buying ETFs. They're buying index funds. That's why. When you see money coming into the stock market, it goes up. Why? Because companies' stock price go up. Now, will that bounce again in the opposite direction? It could. And it very well may sell off from time to time. But I'm telling you, right now is the opportunity to start buying your favorite companies and your favorite ETFs over these next 7 months, right? You got the next 7 months before they start decreasing short-term interest rates. And again, guys, that's my opinion. That's not fact. I didn't get that. I didn't call Jerome Powell up at the chairman of the Federal Reserve. I didn't call him up and say, hey, Jay Powell, this your boy Richard Fain, man. Hey, give me a little something. When y'all gonna start? No, that ain't. I didn't get that. I'm just giving you my opinion. Your opinion might be totally different. I'm just giving you my opinion. My opinion is in July, 2024, Fed start decreasing short-term interest rates. And when they do, they're turning back on the money supply. Stock market starts going back up. Companies start borrowing money again. Boom. Americans can start borrowing money again. 30-year fixed rate mortgage starts coming down. All right. Now, how fast would a 30-year fixed rate mortgage come down? It ain't going to come down very fast. If we can get it to 5% by 2026, 2 years. If we can get it to 5% by 2026, that's doing great on the 30-year fixed rate mortgage. Now, don't get me wrong. Next year, we won't have the Fed funds rate down to 3%. It's not going to come down that fast. But when they start decreasing it, they're going to decrease it by 25 basis points. So be on the lookout for it. You're just getting a precursor from the 1%, right? Because they're buying right now. That's why you saw the stock market bounce this week, especially after the October CPI inflation report came out, and it's still showing that even though the Fed hasn't bumped rates in 4 months, inflation is still coming down. See, guys, you got to put 2 and 2 together, guys. You really do. You got to put 2 and 2 together. Why would the Fed keep raising interest rates if when they haven't raised in 4 months, inflation keeps coming down? They wouldn't raise. They ain't going to raise. They haven't raised in 4 months. And we got the lowest core inflation than we've had since the middle of 2021. And they haven't bumped in 4 months. Put 2 and 2 together, guys. It's over. So position yourself for the greatest wealth transfer in American history. It can be for you. It's definitely going to be for me, right? It's going to be for me because I'm buying. I already told you, I got my money ready to roll. Big chunk of money ready to go. Ready to go. And that's going to be my big investment, right, over the next 7 months, along with my dollar cost averaging I do every single month, along with the Magnificent Seven stock portfolio build, right? So I got the dollar cost averaging that I do every month. Y'all know I started the Magnificent Seven. That's a weekly thing. And then y'all know, I just told you, I got this chunk of money that's sitting in the money market account at Vanguard. And on top of that, I got more money sitting at the bank that's ready to be deployed as well. Nice little chunk of change that I'm gonna put in as well. So all in all, I'm gonna put in some money because I believe it's starting to happen. And I don't wanna be on the tail end of it. See, I don't wanna be on the end where once they reduce interest rates, for me, not for my dollar cost averaging. It's not too late for that. I'm always dollar cost averaging whether the market's up or down. But it's too late for me to deploy the big money, the big chunk of money, once rates start going up. It's too late. So I gotta deploy it before rates start going down. I gotta deploy it before rates start going down. So sometime between now and June, I gotta deploy that money, that extra money. Because once rates start going down, it's too late. At least for that chunk of money, it's too late. Because once rates start going down, then VGT and VOO gonna start going back up again. And on the big chunk of money, I don't wanna buy it when it's going up, right? I wanna buy it when it's down. I wanna buy it low and then hold it and sell it high. Maybe I can sell it sometime in 2025, right? Maybe I can get my target price in 2025 on VGT or in VOO. The goal is to buy it by the end of this year or first quarter of next year. I hope to buy it if we have a sell-off in December. And that's likely, that could happen. We've had it over, I can remember in 2018, we had a nice little sell-off. We didn't have one last year. We didn't have one in 2021, we didn't have one. Market was way up in December of 2021. We might have had a little bit of something in December of 22, but I'm hoping we have a slight sell-off in December of 23, so at least I can get VGT and VOO under $400 a share, and then I'm in a hold pattern for 18 months, 24 months, because I believe in that time period, once the Fed starts reducing short-term interest rates, I think VGT goes to 525, 550. I think VOO goes to 500, 525. That's what I believe. I have no scientific proof of that. I'm just giving you guys my hunch. I'm giving you my guess. But I've been pretty good over these 25 years of just going with my gut, right? And I think that's what I'm gonna do on this one, along with the dollar cost averaging in every single month, along with the Magnificent Seven every single week, right? So I'm heavily invested in paper assets. And I'm okay with that. I know a lot of you guys are not comfortable with that, but I'm comfortable with it because it's not something that I'm gonna lose any sleep because I know that's what the 1% is doing. See, I just follow the 1%. So I reprogrammed myself to just follow the 1%. See, the 1% will leave financial breadcrumbs for you to follow if you just know where to look. They'll leave financial breadcrumbs. And that's what they just did this week. See, when you saw the market, all three major indexes do what they just did, guys, you got to really pay attention to this. I mean, you're talking about the Dow up to 35,000 points. S&P 4,500 points. Just 2 weeks ago, the S&P was barely at 4,100 points. What changed? What changed from 2 weeks ago when it was barely keeping its head above water at 4,100 points. Now all of a sudden it's at 4,500 points. What changed? What made that jump? Maybe the 1% got some intel that the rest of us retail investors don't have. Maybe they got some intel. Maybe they got some information to say, well, the Fed ain't raised in 4 months, so they're done. But they're not going to announce that they're done for probably until 2024. They'll start announcing they're done probably in first quarter of 2024. But, since they haven't announced yet, people still think there may be a chance that they're going to bump. So let's go ahead and get back in. We'll get back in. We'll do a real quick rally in November, right? We'll buy. And then what we'll do is we'll dump in December. Let's buy in November and we'll dump in December. And then obviously we'll start back buying again at the beginning of the year, because we know in 6 months, the Fed will announce that they're starting to decrease short-term interest rates. I think that's their game plan. Now, I could be totally off base, guys, but I think that's their game plan. I think their game plan is buy in November, right? Let's start buying assets in November. That's why I think you see the market where it's at. And then what they're going to do is at the tail end of November, the beginning of December, they're going to turn on the propaganda machine to say, well, okay, guys, we're out of the danger zone. Go ahead and start investing. And then boom, you start investing in December. They're going to dump in late December, take profits off the table, and then they'll come back in January. So that's why I'm saying I'm going to just hold off until I see what's going to happen in December, because I think that's their plan. I think their plan is to inflate everything right now, start buying, pump up, get you all hyped in December, and then they're going to dump in December when you guys start buying in. And that's when they're going to dump. They're going to take their profits off the table, and then they're going to wait till January and start the propaganda machine again and saying, oops, sorry guys, we're wrong. Time to sell. And then they're going to start buying, gearing up for this next 2 years. Again, guys, it's just my opinion. You don't have to believe me. You don't have to agree with me. I'm just giving you my opinion. I'm just one guy on YouTube giving my opinion. Could be 100% wrong. But if I am 100% wrong, it's my money. I ain't got nobody else's money, because I don't invest money for nobody else but myself. So if I'm wrong, it'll be my money on the line. But over 25 years, guys, of doing this, I ain't been wrong that many times. I might have been greedy and missed my exit like I was supposed to, like I did with VGT the first time. I got greedy and missed my exit. But I haven't just flat out missed. I'm just flat out missed. And if I did flat out miss, maybe in 2008 on my Bank of America stock, I missed. I missed in 2008. I saw it was coming, but I missed. But guess what I did with that Bank of America stock? Even though I missed, it declined by 50% in value. In 2008 now, as soon as the recession hit, I missed. I should have rolled the money or moved it out of the stock, but I didn't. I left it. And all I did was I just waited. I just left it in the stock, kept getting the dividend. For 10, 15 years, I just left it in the stock, kept getting the dividend. And guess what happened? Guess what happened? Guess what happened in early 2023? It right-sized itself. Bank of America stock started climbing. And boom, I got back to even on that particular part of my portfolio. So my point is, the stock market is going to go up and down. But long term, I think we win if we got good companies, if we have good ETFs, if we have good index funds with historical track records of multiplying money. I think you win. At least that's what I've done. I've never put money in the stock market, guys, and went to zero, ever, in 25 years. I've never put my money in the stock market and went to zero. I haven't. Now, have I lost on some positions? Yes. But overall, I've won. You're talking about a guy that started putting $150 every 2 weeks when he was 30 years old. I started putting $150 every 2 weeks into my company-sponsored 401k plan. At 30, I'm 55. So that was 25 years ago I started doing that. That's what I've been doing this whole time. Never an expert, never tried to be an expert. Just understood and learned how the 1% do this thing. how they manipulate the markets. Same thing with real estate they're doing right now. They're doing the same manipulation with real estate. You think these 8% interest rates are, oh, no, that's by design. It's by design. It's by design, all right? It's by design. Because see, here's the deal. Here's what you got to understand. See, when you raise interest rates to 8%, short-term, not short-term, but long-term interest rates, 30-year fixed rate mortgage, right? What does that do? That decreases affordability, right? It decreases affordability. So now you got all of these people who would like to buy, they can't buy. They're just sitting on the sideline chomping at the bit for rates to come down, right? They can't buy because they can't afford the monthly mortgage payment at 8% or 7.5%, but they can afford it at 4.5%, maybe even 5%. They could probably pull that off. Most lenders will probably qualify them, but they can't get qualified at 8%, right? So now you got all this pent up demand, right? Even though they can't buy now because of affordability, but it's still demand there. People just can't buy. So what does the 1% do? They say, well, okay, let's keep rates high. Let's continue to build up this demand. And then at some point, we'll reduce interest rates. All that demand will open up. And then guess what? Whoever's holding all of the good prime real estate, now all of a sudden you get to make a profit, right? But for now, let's make a lot of these people rent, because we have to make sure all of these apartment complexes that the 1% have built around the country, especially in Florida. They got one on every corner, brand new 3, 4, 5, 600 unit apartment complexes, and they all full. Why? Because all that pent up demand, and the reason they raise them interest rates is because they had all that product. Now, you know that product would have went unrented if they'd have kept interest rates low, because those people would have just went and bought homes, right? They kept interest rates low. They kept inventory low so prices could stay high. They kept inventory low so prices on existing inventory could stay high. They jacked up interest rates to make it less affordable. So therefore, all of these apartment complexes they built over these last couple of years since COVID, since the pandemic, they would have been empty right now. They would have been empty. But yet and still, they all full. Why? Because that 8% interest rate for 30-year fixed rate mortgages has forced people to rent. But at some point, those interest rates are going to come down. And all of that pent up demand is going to be released, because now these people will be able to afford to buy a house because of what? Interest rates are lower. Prices are where they are because we don't have any inventory. So you got to understand, the more inventory you have, the more people have to choose from, right? It becomes not a seller's market anymore. It becomes a buyer's market. See, right now it's a seller's market because we got low inventory. But when we get more inventory, it becomes a buyer's market. When it's a buyer's market, sellers have to reduce their price because they got competition. Right there, right now is no competition. So if I'm a homeowner and I got a premium property, and in my neighborhood, there ain't no new construction going up, there are no other properties on the market, and I put mine up, I don't have to reduce my price because I'm the only one for sale in the community. That's it. But if there were 10 houses in my community up for sale, and I got 10 other houses to compete against, if I'm a seller and I'm trying to move my house, I'm trying to sell it, I'm more apt to lower my price because there's more to choose from. When there's less to choose from as a seller, I don't reduce my price. I just hold on. Plus, I got a 3% interest rate. I got a 3.5% fixed. I'll just sit tight. Plus, I got a ton of equity because I bought the house pre-pandemic. I bought the house in 2020, 2021, a little bit past post-pandemic. So please understand, this is all my opinion. I know how the 1% works, right? And I know they're behind everything that happens in this country. They are. They're behind it. Now, they got politicians in place, but they're the ones that put the politicians there. And this is no conspiracy theory. This is just how the country operates, guys. The United States is just a big company. It's just a big company ran by wealthy people who put CEOs and politicians in place. It's still ran by wealthy individuals, right? Conglomerates, big company, right? And I understand that. I ain't got nothing against that. That's just the way our economy was built. It's built on capitalism, right? And that's the way it works. But see, my point is, if you understand that and you know how to maneuver and look at the financial breadcrumbs that the 1% dropped for you, then listen, man, you got an opportunity to do well. They're dropping financial breadcrumbs right now. Look at what's happened to the stock market in the last week. Pay attention. Please pay attention. Better yet, go out and do your own homework. Go look at other content makers and see what they're saying. Get you some different opinions. But ultimately, you got to come up with your own opinion. My opinion is this is the greatest wealth transfer in American history getting ready to happen over these next 7 months. I'm going to be a part of it. I'm going to be a part of it. There's no doubt. I'm getting in and I'm going to be a part of it. Just like I did in 2020. The last great wealth transfer in this country was from March, April 2020. Y'all remember when the pandemic broke and the stock market went down 35, 40%? Everybody was selling everything and the world coming to an end. It'll never be the same again. And guess what happened? That's the propaganda machine. See, what percentage y'all fool? Guess what happened? 57 days later, all-time highs. Who do you think was behind? No, I'm not saying the 1% was behind pandemic. I'm not saying that. I'm just telling you the 1% was behind the propaganda machine that the world was ending. The stock market would never bounce back. That's what I'm talking about. They were not responsible for the pandemic. Nobody. That's something that happens in the world. So no one was responsible for that. I'm just saying the propaganda machine that went into overdrive when it happened and the market fell by 35%. I think the propaganda behind that was the 1%, because they saw an opportunity. Although a horrific thing was happening, they saw opportunity in that horrific thing, right? They saw opportunity. How in the world can the stock market fall by 35% and regain and surpass in 57 days? Come on, guys. Just, you gotta, it was artificially done, right? So what did I do? I said, okay, I'm hip. I see the breadcrumbs. I see the financial breadcrumbs. Okay, so what I'm gonna do in September of 2020, I'm all in. And that's what I did on that chunk of money I told you about. I just put it all in, 250K, boom. 3 years later, boom, made 100K, 30% return on the money. So my point is, I see that happening again. Nothing to do with the pandemic. I'm talking about just the financial breadcrumbs where you're seeing the propaganda machine tell people certain things so that you can sell your investments. They can pick them up at a discount, and then they're going to hold them till they've made enough money, enough appreciation, and then they're going to say sell them, right? My opinion for me is right now they're buying. So this is the time I'm going to buy. By June of 2024, I think they start really unloading some of their assets, some of their paper assets that they're going to buy over these next 7 months. That doesn't mean they're going to get out of the market totally. They're not, because we will be just in the beginning stages of a bull run. But my point is, they're trying to buy these assets as cheap as they can buy them now. Because once rates start going down, once rates start going down, then the market is going to start going back up, right? And then everybody going to want to get in. And that's a perfect time for them to exit. It's a perfect time to exit. When everybody is greedy, you be fearful. When everybody is fearful, you be greedy, right? That's sort of what I'm talking about here. Everybody right now is fearful because we don't know what's going on. It's volatile. 1 week it's up, 1 week it's, so people are fearful, right? But guess who's greedy? The 1%. Now, when it's the reverse and everybody start getting greedy, the 1% get fearful, pull their money out. They made their profits, they move on and wait till the next cycle, right? That's how the 1% roll, right? So all I'm telling you is come up with your game plan. I've just told you my game plan. I walked you through my game plan. My game plan is to buy in December if there's a sell-off, which I think there will be. That's my opinion. You don't have to agree with me, but I think the 1% will exit in December so that he can take profits off the table before the year end. And then I think they'll re-enter in January. So I think I will wait on the big chunk of money. I will wait until December, or VGT and VOO get under 400 a share. If I can get them under 400 a share, I'll go now. And I don't care what the 1% does, because I know the bigger picture is June of 2024, when rates start coming down, we're going to be in the next beginning stages of a bull market. So if I can get them under that, I think I'm good. And I'm prepared to hold them for 2 years. I'm prepared to hold them till they're north of 500 per share, right? Right? I'm prepared. Now, VOO, will it get under $400 a share? Yeah. It already got under $400 a share a couple of weeks ago. You guys don't have a clue, man. Some of y'all, not all y'all, I'm just like some of y'all just be making comments and don't even know. I mean, dude, VOO has already been under $400 a share. It was just under $400 a share a couple of weeks ago. It's like in the 390s. So how are you gonna sit up here and say, oh, no way it won't get the 400? I mean, man. Again, I tell you, man, some of these people, these live streams just be crazy. Just be tapping. But nevertheless, I'm gonna wait if it gets under 400 a share on VGT or VOO. I'm putting a big tranche of money in and I'm going on my business. If it doesn't, if it stays in the fours, I'm gonna wait till December. And I'm gonna see when we have the sell-off in December, will it go under 400? And if it does, boom, I'll put the big tranche in then. So that's my game plan for paper assets. And those are the only two I'm buying. I'm not buying nothing else. I'm buying VOO and VGT. Tech, and then the what? Top 500 companies in America, right? Now, Magnificent Seven is in the top 500 companies in America. It's the 7 largest companies. It's the 7 most profitable companies. It's the 7 companies with the best stock price out of the S&P 500, right? It's the top 7 companies. That's why they call it the Magnificent Seven, right? And y'all know who those are, or I'll give them to you again. You got Apple, you got Microsoft, you got Meta, you got Alphabet, you got Amazon, you got NVIDIA, and you got Tesla. Those are the Magnificent Seven out of the S&P 500, right? So my point is I want to be in the broader stock market through the S&P, right? Because I think the Magnificent Seven is going to continue to kill. And then the other 493 companies behind them, I believe, will bounce as well. So I think over the next couple of years, you'll see the S&P 500 be in excess of 5,500 points, maybe even 6,000 points over the next couple of years. That's my opinion, guys. You don't have to agree with that, right? But I believe that's where it's headed. And I believe, obviously, I believe the tech sector is, look at the NASDAQ. It's almost 15,000 points. So you know what the tech sector is getting ready to do. And I got to be in it. So I'm going to be in it through VGT, which is Vanguard Information Technology VGT, ETF. That's how I get in the tech market heavy. And that's the one I'm buying. I'm not telling you need to buy it. I'm not telling you need to buy anything. I'm not telling you to do nothing other than figure out what your game plan is. If paper assets is not your thing, don't worry about it. You supported me doing this live, and I appreciate it. But if you are thinking paper assets and you are thinking, what should I be doing? Should I be on the sideline? Should I be invested? Then you got to figure out what you're trying to accomplish, right? You got to figure out what you're trying to accomplish financially, and can paper assets help you get there? You got to look at the history. That's what I do. I just look at the historical information that's out there for free. I just go into Vanguard, put in VOO in the search bar, hit enter, it brings up VOO. It has big old tabs right there that says, one of them says performance. Click on that, scroll up, and it'll tell you 5-year, 10-year, 15-year, and you can see exactly what the returns have been. And it also shows you what the returns have been against the S&P 500 index that is tracking. See, that's what you got to do. You ain't got to be no genius. You ain't got to be no rocket scientist. You ain't got to be no Harvard educated PhD mathematician. No, you ain't got to be any of that crap. All you got to do is say, okay, I like VOO. I listen to this guy on YouTube, and he like it, so let me go research it. Let me go into Vanguard.com, go up to the search bar, put in VOO, which is the ticker symbol, hit enter, boom. It's going to bring you to VOO's page, and it's going to have some tabs up there at the top. One of those tabs is going to say performance. And then when you tap on that and you scroll up, you're going to start seeing the history of what that fund has done. You know, year to date, 1 year, 3 year, 5 year, 10 year. I like to look at the 10 year. I like to look at the 5 and the 10 year. And that gives me a good idea of, okay, over the last 10 years, what has this fund done from a ROI? And then what has it done compared to what the S&P 500 index did? And here's a little secret, here's a little trick that I use. If that return on VOO isn't dead on, right? If it ain't really, really dead on close to what the S&P 500 index did, then I know something's wrong. And the only thing I can kind of look at in that situation is I got to go to the expense ratio. I got to see what they're charging for me to keep this money in this fund, because you really, if you got the same 500 companies that the S&P 500 index has, and you track that index, so when a company moves out and they put a new one in, you do the same thing. It's automatic. Your rate of return should be similar to that. So you got to go look at the expense ratio to see what they're charging you. Good news about Vanguard, at least what I like about Vanguard, the expense ratio is not that much. I believe on VOO, the expense ratio is like 0.03%, something like that, 0.03%, I think. So for every $10,000 I put in, they charge me $3 a year to manage it. Yeah, I think that's the expense ratio. Again, don't take my word. Go out on Vanguard's website and do your own fact finding. But I'm telling you, based on my little knowledge, that's what I believe it is. I think it's a 0.03% expense ratio. That's very cheap to manage money, right? So I want to find the very best ETF, but I also want to have the one that has the a really low expense ratio, because I don't need them charging me 1% and eating up my ROI to do nothing. You ain't got no human beings doing nothing. You're tracking the S&P, which is basically automated, right? You're going to have the same companies the S&P got in it. So you don't need to be charging me 1%. You don't need to be charging me 1.25% expense ratio. That's crazy. So you got to look at that, right? Because that directly comes out of your return. That's how that fee is collected. It's collected out of your return. And if it is no return, let's say you get a negative return, then it's coming out your principal. That's the way it is. So at least my opinion. You guys go do your own research and figure that out on your own. But I'm giving you my opinion. Again, not a convince you channel, an opinion channel. So if you don't agree with something I say, it's okay. The world will not blow up, right? You'll be fine if you don't agree with me. It's my YouTube channel, so I get to talk about what I want to talk about. Now, if you want to talk about what you want to talk about, I encourage you to start your own YouTube channel, right? Make your own videos. Give your opinion. Boom, there you go. Everybody happy. All right, guys, I'm going to get ready to tap out of here. For you guys who have not hit that thumbs up for me, come on, man, hit the thumbs up for your boy. Give me some thumbs up action. I really appreciate it, man. You know I love rocking with you guys, and I know you guys rock with me. So hit that thumbs up for me. I really would appreciate it. Get ready, man. Get ready. Think about what I just said. You ain't got to agree with everything, but think about it. Think about what's been happening over the last week. What's been happening since the jobs report, really, right? No. Let's take that back. What's been happening since November 1st, which is the Fed meeting. All this started happening, guys, when the Fed did not increase short-term interest rates. On November 1st, that was the fourth month in a row they didn't increase short-term interest rates. That's when the rally started. If you think about it, prior to the Fed meeting in October, guys, stock market was selling off. It was down. I'm telling you, S&P was like 4,100 points. Soon as the Fed met on November 1st, and the Fed chair came out, we ain't increasing rates, but we are planning on keeping rates higher for longer. He did say that. Then followed by what? The jobs report came out that same Friday. I believe it was November 3rd. Remember, the jobs report came out, and expectations was the economy would add 170,000 new jobs. The economy added only 150,000. It beat expectation. Second piece of good news. See, first piece of good news was Fed didn't increase short-term interest rates. First piece of good news. Second piece of good news, jobs report came in strong, beat expectations. Third piece of good news, October CPI inflation report came out this past Wednesday. Beat expectations year over year, both core and headline. Come on, guys. Financial breadcrumbs. I keep telling you guys, they drop in financial breadcrumbs. You just got to follow them. Those three pieces of information tells you a lot about why the stock market is doing what it's doing right now. It also tells you that there are some people out there that are pretty confident that we are headed in a no more interest rate hike environment. That's why you see things moving. Now, again, don't mean they won't sell off in December. Some of the 1% may sell off in December to take their profits. I'm not selling off in December, but some of them are selling off in December and they're going to take profits off the table. So you may see the stock market sell off in December. Might happen. Don't be like, oh, I told you that guy, Richard Fay, he knew what he was talking about. Shoot, stock market just sold off. Guys, again, I'm no expert here. I'm just giving you my opinion. I'm telling you what's going to happen. It ain't uncommon for the 1% to sell off in December and take profits. It's not uncommon. It's not. That doesn't mean they will. I'm just telling you it's not uncommon if they do. Hell, if I had done tricked y'all for a whole year and made $1 gazillion, I might want to take some of mine too. It'll trick y'all for a whole year. It's propaganda machine, right? It'll trick you for the whole year of 2023. You do know 2023 was an amazing year in the market, right? Compared to 2022. 2022 was crazy. It was horrible. But you do know 2023 was a great year in the market. But most of us stayed on the sideline. Why? Because 1% said stay on the sideline. It's a great year, man. It's a great year. So, yeah, think about that. Think about those three things I just mentioned. Think about it. Think about it. All of this stuff started what? November 1st. What's today? November 17th, right? November 1st, everything started with the Fed meeting. And now, 17 days later, we got a stock market that's booming. Why? What changed? I just gave you what changed, right? And the 1% were behind all of that, right? They are behind all of that because they control what happens in this country. All we got to do is watch for the financial breadcrumbs they drop, and that will give us some insight to what's getting ready to happen in the markets. Same thing with real estate. You just look for the financial breadcrumbs. I've given you my little story on why I think is happening, what's happening in the real estate market. I think the 1% behind the whole thing. That's my opinion. I think they're behind the whole thing. I think they're behind the whole thing. I think they forced interest rates up so that they could squash affordability and let the multifamily housing oligarchs off the hook. Because if you remember, the multifamily oligarchs in this country, they were going to get crushed. They were going to get crushed if interest rates stayed low. And the reason they were going to get crushed because there wasn't nobody going to be living in these brand new apartment complexes that they were building after the pandemic. So how do they save the multifamily oligarchs? They increase interest rates on the 30-year fixed rate mortgage. What does that do? People can't afford to buy no home no more. So what does it force them to do? They gotta go stay in one of them apartments that these oligarchs have built over the last couple of years. That's just my opinion. Y'all don't have to believe me. Y'all don't have to agree with it, but I'm just giving you my opinion. I think I'm not saying that's a bad thing. I'm just telling you that's business. That's how this country works. It's business. If you really believe all of this is just kind of fluky, it's just a fluke. No, it happens because short-term interest rates went up. And then when short-term interest rates go up, they do what? They affect what? The 10-year Treasury bond. 10-year Treasury bond affects what? The 30-year fixed rate mortgage rate, right? It affects it. Indirectly, it affects it. I still say multifamily oligarchs had a lot of inventory coming on the market, which could have been detrimental to our economy, guys. You got to understand, you're talking about billions of dollars worth of rental property coming on the market in the form of multifamily. If no one rents that stuff, you know how many banks are going to be on the hook for those loans? Because those oligarchs, those multifamily oligarchs ain't dumb. They didn't use their money. They went and borrowed the money from banks, big boy banks. And those big boy banks wasn't going to get paid back unless those properties had tenants in them. Because here's the deal. When you're at that level of borrowing money, there is no personal guarantee back to the oligarch. There is no personal guarantees. The bank gets paid if the property performs. The property is the guarantee. If the property doesn't perform, the bank takes the property. They don't go after the oligarch because there is no personal guarantee. Right? It's a non-recourse loan. You guys go look that up, what non-recourse means. It's a non-recourse loan. That means it does not come back to the oligarch. The bank just gets the property, and they have to get their money back from the property sale. Right? Oligarch goes on to its next project. See, that couldn't happen, though. That wasn't going to happen. So guess what? You jack interest rates, you squash demand. And now you also got to understand, you also got what? You have national home builder oligarchs. So you got the national home builder oligarchs. You got the multifamily oligarchs. They get with who? The decision makers, the top 1% of wealthiest families in this country. They get together and they say, well, listen, multifamily, we know you're going to be in trouble, but we're going to bail you out. We're going to raise interest rates so people can't buy homes. We're going to force them into apartments. Okay, national builder oligarchs, stop building. Stop building now so that you don't get caught. Because interest rates are going to go so high, you're not going to be able to sell your inventory, so stop building. Only way you build if someone walks in there and they give you a 25% deposit or they pay cash. That's the only way you build. Outside of that, ain't gonna be no loans available. So don't be building a lot of multifamily unless someone like BlackRock or one of these other hedge funds come to you and say, hey, build us a single family home rental community with all cookie cutters, basic single families, all cookie cutter. We want 1,000 of them. We're gonna buy them. See, and that's where the big hedge funds come in, because see, then the big hedge funds come in and get with the national builder oligarchs and say, well, okay, Multifamily oligarchs are going to get taken care of first. Second, you're going to get taken care of, but this is how we're going to help you. We're going to have y'all build 1,000 single-family home rental units. We're going to buy them all. We're going to put tenants in them. When interest rates come down, we're going to put them all up for sale. Likely, if we got 1,000 rented, we'll probably sell 800 of them to the existing tenants. That'll leave us with 200 we need to sell on the open market, but we'll be okay because interest rates will be down and demand will be back up and we'll be able to get rid of those. I'm telling you guys, that's how this country works. I'm telling you, we don't know that because see, we're not privy to it. But if you look for the financial breadcrumbs to how things work really in this country, you'll know that's what they do. They meet in these places where they hash out all of this stuff. And that's what's happening. Why in the world would somebody still be building these big old multifamily apartment complexes then? I'm telling you guys, in Southwest Florida here where I live, everywhere you go, they're building them. And I'm like, what in the world? How can they do this? That's it. That's my opinion. Again, I know some of y'all think, oh, this dude's crazy, but I'm telling you guys, it's a different world out there when you're talking about this type of wealth. It's a different world. It's a world a lot of us don't know about because we don't have that kind of wealth. But it is a world out there that's like that, guys. That's how the things operate in this country. Why hasn't the Fed raised interest rates in 4 months then? Please make a case for me why they haven't raised interest rates in 4 months. And inflation is still coming down. That's why they haven't raised it, right? They haven't raised it because they don't have to anymore. The upper 1% has told them enough is enough. You're not raising it anymore. I don't care what y'all tell these people. Who in the world is to say inflation was ever at 9%? I don't know if it was ever at 9%. All I know is I saw something on TV. I read something that it was, but I don't know if it really was or not. I don't know. Maybe it was, maybe it wasn't. I don't know. I just don't understand how they ain't raised in 4 months, but yet and still, inflation is coming down. Yet and still, inflation is coming. Check this one out, Doc. Here's one for you right here. Here's one. Third quarter of 2023, guys, they told us GDP was 5%. How in the world can GDP be 5%? And inflation is at 4%. Come on, guys. How can inflation be 5%, how can inflation be 4%, but GDP be 5% in the third quarter of 2023? That don't add up. That math ain't adding up. Something ain't adding up. Something smells funny. And in my opinion, it's the 1%, right? With real estate, it's about what? It's about what? For you and I, it's just about this little house we buying. That's all we on that level. We on just a little house. This is my house. This is my rental property. We're on that little small level. But when you look at this big old level, when you look at the big level, I'm talking about multifamily oligarchs. When you look at national home builder oligarchs, right? When you look at institutional investor oligarchs, guys, these are the people that control this country, man. I'm telling you, these people control what happens in this country. They elect who goes into the White House. They bless who is on the Supreme Court. I'm telling you. Now, they may not have nothing to do with your little local mayor that y'all elect. They let y'all do that. But at the national level, they figure out all that. Why do you think they got an electoral college? Why do you think they got an electoral college? See, you got the general vote, right? But you can win the general vote and don't even get elected to the White House. Why is that? Have you ever thought about that? Why can the people say this is who we want elected, but that person don't get into the White House? Come on, man. Breadcrumbs. Y'all got to follow the breadcrumbs, man. I'm telling you what's happening in this country. And I'm not saying that's a bad thing. I'm just telling you, if you're aware of it, you know how to move. You know how to build your wealth. Why is it? Why you can win the popular vote? Why you can win the general election? Why can you? But you still end up not in the White House. Why? Why is that? Little thing called the Electoral College, baby. That's what it is. That's the big boys, the big girls. That's the 1%. See, they got an override. They have an override, and that's the override. The override is the Electoral College. Right? So, my point back to what I'm saying about building wealth. Great wealth transfer in history. Right? In history. The last one was 2008. Well, no, let me take that back. The last two. The first one, 2008, that I was really a part of. I wasn't, all that .com stuff, I wasn't into all that. But 2008 was the big one for me. And then the next big one was what? The pandemic. March, April 2020, the pandemic. That was a mini one, but that was another great wealth transfer. You know how many people made money with Tesla during that time, guys? Remember, that's when Tesla had what did Tesla have? Was it a 20-to-1 split or 5-to-1 split? It was something. It was one of them splits. But had you been invested in Tesla, you'd have been rich right now. Been rich. This guy on YouTube, Meet Kevin, got rich just in Tesla, almost. Got rich. So my point is, right now, I think is the third one over the last, 20-something years. We've had little mini ones, but these are the three big ones. I think this big one is coming. I think it will start in 2024. I think it will start midway through 2024. That's my opinion. You can believe whatever you want to, right? I don't really care. This is my YouTube channel. I'm going to believe what I want to believe, and I'm going to articulate it. And if you agree with it, great. If you don't agree with it, great. I'm not going to lose one bit of sleep because it's just my opinion. I don't mean it's right. I'm just giving you my opinion. So the key here, though, is since we know that the country is manipulating us, and I say the country, I'm talking about the upper 1%. They're manipulating us because, see, the way the whole thing works is 1% of the population controls 99% of the wealth, right? While 99% of the population generate that wealth for the 1%, right? I'm talking about the oligarchs, right? I'm talking about the upper 1% of the richest and wealthiest families, companies in this country. They're the movers and shakers. Now, even though a lot of us fall into the 99% category, and I know some of you guys take offense to that, but I'm a 99%er. I don't take offense to it. I just know how to use the financial tactics of the 1% to build my wealth. And all I'm trying to do is give you my opinion on how you can potentially take a look at this thing and figure it out for yourself, right? You can figure it out for yourself. I'm telling you, if you just think about what's been happening, right? So when the pandemic broke out, the 1% said, listen, Fed, listen, government, the only way we keep this thing from not collapsing, is we have to turn on the money printer and we have to give these people something. We have to give them hope. We have to give them hope. And the hope they gave us was money, was stimulus money. And with that stimulus money, that gave us hope, right? That gave us hope. That also increased our savings, right? It increased our savings to the most it's been in a long time, upwards of $2 trillion. We shut it down. We started saving, locking this money away for a brighter day. 2021, that brighter day came. Pretty much the whole country was open back up. They were getting the supply chain back online. Boom, the campaign started to spend that money. Okay, guys, you've been on the sideline for about a year. It's time to get back out here, spend some of that pandemic money. Let's spend some of that pandemic savings money. And the propaganda machine started, right? Guess what we did? Over the last 2 years, we went from $2 trillion in savings down to 200 billion. And it's estimated that it'll even go down further than that by January of 2024. I don't know. I'm just telling you what I've read. You guys may have heard something different. I'm telling you what I've read, what I've heard, what I've seen. And I know it's true, because why would credit card debt be 1.3 trillion? People using that as their emergency fund. They out of savings, right? My point here in telling you that is the only thing that saves you is assets. Assets. Assets is what saves you guys. You got to figure out how to buy assets. Now, you don't have to buy paper assets, but you got to buy some asset that will generate income for you at some point, because you can't work forever. You can't trade time for money forever, guys. We all get older. I'm a 55-year-old guy, right? And I traded time for money till I was 51. So for 4 years, I've been free. Now, could I have been free a little bit sooner? Sure. But I was a little scared. I was a little afraid, although I had assets. I was like, I'm making this money at the bank. I'm making 6 figures. I got some assets, but you know something? I mean, it's easy money. Let me just make this money. All that was my fear, right? But once I figured out, okay, shoot, man, I can get out of this thing and take my skill set and apply my skill set other ways and control my own time and control my own financial destiny. Let's give it a shot. I can always go back to banking if it doesn't work out for me. And then I jumped out there and I did it. All I'm telling you is my story is similar to a lot of y'all's story. A lot of y'all are exchanging time for money. The key, though, is at some point you're not going to be able to do that. So you got to plan for your future. You got to figure out a way to take care of yourself when you're not able to give these people time. Because when you can't give them any more time, guys, I promise you, they're not going to give you a check. They're not going to pay you. Oh, well, you know something, Richard, you're a great employee for 25 years and we love you. We're going to send you this check for another 5 years, even though you don't come in and give us no time. It ain't how it works, guys. Don't work that way. When I left banking after 25 years, in the company that I left, when I finally was done, I had been with them, I want to say 7 years. Nope, I didn't get no exit package. I ain't get nothing. Well, I quit, but nobody give me nothing when I quit. Hey, thank you, Richard. It was great working with you. Let us know if you need anything. Bye. That was what it was. And I was okay with that because I knew that's how this world works. See, I wasn't expecting nothing. But that's the way corporate America is. That's the way this country is set up, right? It's set up that way. So you have to figure out for you, how in the world can I survive when I'm not trading time for money anymore? Because at some point you're not, guys. I don't care if you're a 20-something year old and you're young and you're healthy and you feel like, shoot, I'm good, man. I ain't worried. I ain't 50 yet. You old dude. I ain't that old. I'm cool. I said the same thing, guys. You know, I said the same thing. Next thing I know, I went to bed. I woke up. I was 40. I was like, God, damn. I went to bed again. Woke up. I was 50. So it comes quick, guys. You don't understand it. It will creep up on you before you know it. See, we think we got a lot of time. Oh, I'm only 20-something. I got plenty of time to worry about my nest egg. I got plenty of time to worry about. I'm gonna go out and have me a good time. I'm gonna go get me what the comedian name? I can't even remember his name. The comedian Kevin something. Can't even remember his name. But I'm gonna go get some of his alcohol. I'm gonna go have fun. I'm gonna go party. Guys, I did the same thing when I was young. I loved having a good time and hanging out a little bit with my friends. But you know something, I thank God I was smart enough, though, to understand how the system works. And even though I was having a good time, Kevin Hart, that's his name. Thank you, man. I appreciate you, whoever popped that up. Thank you. And I know I'm digressing, but I'm just, have you noticed that every entertainer, every celebrity almost, like the big boys. All of them got like liquor companies now. All of them got like liquor that they promoting to people. Now Kevin Hart got his liquor line. He got a supplement line. He got and The Rock got a liquor line, a supplement line. I mean, what the hell is going on? You want me to tell you what's going on? The 1% done checked them, see? See, the 1% done came to him and said, listen, I know, Rock, you got 300 million people following you on Instagram, but you ain't making no money off of them. All you doing is posting pictures of yourself and your little workout videos. You ain't making no money off of them, Rock. Let us help you. So the 1% come in, get The Rock, get Kevin Hart, all them big boys, go get them, big girls, go get them. The 1% get them and know how to, and show them how to manipulate y'all. And that's all they done. And I ain't mad at them, that's the American way, but come on now, y'all know Kevin Hart don't know nothing about no create no daggone vodka or liquor or tequila, whatever he creating. He don't know nothing about that. Y'all know The Rock don't know nothing about no create no alcohol at all. The 1% came to him and said, listen, Kevin Hart, you got 100 million people on Instagram following you. You ain't monetizing them at all, because all them people ain't coming to your comedy show. So let's help you. We're gonna put you on the face of this thing. We're gonna put you out front. And we're gonna handle all the back end. And we're gonna pump this thing through the propaganda machine, and everybody gonna make a lot of money. And that's what they're doing. I ain't mad at them though. I ain't mad at them. But I just chuckle when I see it. When I had my Instagram account, y'all know they disabled my Instagram account, so I can't even see Kevin Hart or The Rock little reels anymore about the alcohol, because they disabled my account. It was too many scammers impersonating me, and I believe they held me accountable for that and canceled my account. So I can't watch them boys no more. But when I was able to watch them on Instagram, I follow both of them. They're in my feed, right? So I just chuckle, man. Rock come on there with the tiny shirt on and the muscles and the tequila. He eating pancakes. He did all kind of stuff, man. I was like, boy, these jokers are turned into marketing geniuses. Boy, this man eating pancakes, telling people how to get the pancakes. He telling people how to get the tequila. He telling people how to get the Under Armour gear. All kind of stuff, man. I'm like, what the heck is going on with Instagram, man? These big boys. But hey, Rock got like 300 million people following him. So that's smart, man. See, the 1% use those people, right? Now, I ain't really using them. They just go into partnership. See, the 1% are smart. They know how to go and get people who got access to people. Now, some people can say, the same about me, right? Some people can say, shoot, you pitching Weeble. That's the 1%. It probably is. But hey, I use it. So I can't help but share it with you guys, because I use it, right? So I ain't hating on nobody that the 1% come to and collaborate with. I'm just wanting y'all to know that's how this world works in every aspect. That's how the world works. The 1%, especially in the United States, the 1% controls everything. Not a bad thing. We just got to be aware of it. We got to know when they're dropping financial breadcrumbs for us. We got to follow those breadcrumbs, because they're going to lead us to wealth, because they're wealthy. If I'm going to build wealth, I want to mimic somebody that built wealth. If I want to build wealth, why would I want to go to some joker that ain't got no wealth? Right? If I want to build wealth, I want to mimic somebody who has built wealth, real wealth. Wealth that takes care of them. So that's what I do. I just mimic the 1%, right? I look at the financial breadcrumbs, right? November 1st, no increase in rates. Fed, first breadcrumb. Second breadcrumb, jobs report, beat expectations. That's second breadcrumb. Third financial breadcrumb, CPI inflation report for October. Beat expectations. See, those are 3 financial breadcrumbs I just follow that the 1% has dropped, right? And then with those 3 financial breadcrumbs, it brings me to the conclusion that no more rate hikes. And guess what? That's why the stock market is going the way It's going right now. I just followed the breadcrumbs, just followed the financial breadcrumbs. And I gave you the 3 breadcrumbs, right? You know what they are. Continue to look for financial breadcrumbs from the 1%, and it will help you maneuver as you decide how you want to buy assets to build your wealth. Real estate is coming next. All you got to follow is this one financial breadcrumb. And guess what that is? Interest rates. Just follow the interest rates, guys. When you start seeing them interest rates come down for that 30-year fixed rate mortgage, you know it's about to go down in the real estate market. Just follow the interest rates. That's the key. Just gave y'all some game right there, man. Just follow the interest rates. When you start seeing, ooh, shoot, they used to be 7.5, now they 6.5. Ooh, now they 5.5. Uh-oh. They mess around and get in the 4s. It's about to go down, I'm telling you. So my point, though, is follow the financial breadcrumbs. That's all you got to do. Follow them and act. Act on it. Don't just, oh, I followed that breadcrumb and boy, it looks interesting, but you know, I'm gonna hold on. Hey, you ain't gonna build wealth that way, man. You're not gonna build wealth that way. You gotta take action if you wanna build wealth and just follow the financial breadcrumbs. I'm waiting for that to happen for the majority of you guys who are gonna be buying real estate. Now, obviously, I'm starting the prime real estate fund and I'm in the formation phase of doing that, but we'll be using that fund to buy properties cash. But I'm still gonna follow interest rates because interest rates are gonna tell me when properties are gonna be in a situation where I can buy them cheaply. You gotta understand, interest rates go down, affordability goes up. When affordability goes up, when inventory goes up, it becomes a buyer's market instead of a seller's market. Prices go down. Inventory go up, right? Inventory goes up. Prices come down because there's more competition. So in the prime real estate fund, I'll be looking for that, right? I'll be looking for opportunities to buy properties at market or slightly below market. I'm not looking to buy properties over market. When you're buying properties over market, in most cases, it's because of what? Limited inventory. But if we can get inventory up, which I think it's coming, I think at some point national builders will start building more inventory, but if we can get inventory up. Now, there's another opportunity for us in the prime real estate fund is multifamily as well. Now, even though single family is all we're gonna start out with, we're not gonna buy any multifamily to begin with, but down the road somewhere, if any of these large multifamily oligarchs get in trouble and have to divest some of their properties at a discount, you never know. There may be an opportunity down the road for the prime real estate fund. But in the beginning stages, in the initial phase, we're just gonna buy 1 to 4 family dwellings. And I'm on my way to getting that going. So stay tuned for more information on that as I get a little bit closer to the formation. Many, hundreds of you have already sent me emails saying, Richard, add me to the prime real estate fund investor list. And I've done that. I'm keeping that email list. It's building every day. And as soon as I get to the point where we're able to get this thing formed, we can get the offering documents put together and put out. Awesome. So stay tuned for that. Well, all right, guys, I appreciate you. I'm gonna get on off of this thing. I'm almost going on 2 hours on this thing. I appreciate y'all, man, rocking with me, listening to all my thoughts, all of my opinions. And I know a lot of you guys are okay with me giving my opinions. I know some of you guys don't agree with my opinions, but that's okay. It's healthy conversation, guys. That's all I'm trying to get you guys to understand is be aware of what's going on. Just be aware. If you're trying to build wealth and control 100% of your time, control your own financial freedom, just be aware of what's going on. Be aware of really how this country operates and works, right? Please be aware of that. I just don't want you deceived for your whole life, right? Don't be deceived and think, oh, that just happened. No, no. People get elected to the White House don't just happen. The upper 1% have blessed that. And again, like I told you, they got a safety net because they got the Electoral College. So even though y'all try to bucket and vote in somebody they don't want, they just gonna go to the Electoral College and flip it on you anyways. That's the safety net, the Electoral College, right? Same thing with big corporate. Remember when all the big banks got into trouble in 2008? What happened? What happened? What happened? Government bailed them out. 1% bailed them out. Bailed them out. The 1% bailed out all the big banks in 2008. Think about it. All your tier one, too big to fail banks, they are wealthy as ever right now. You're talking about what? What was 2008? What was it? 2023? So you're talking about 15 years ago. 15 years ago, guys. And now you look at their balance sheet. Go out online. It's public record. All you got to go is go online and look at Bank of America, Wells Fargo, JP Morgan Chase, Citibank, and US Bank. Go look at those 5 banks. Go to their website. Go down to what they call it, investor relations. It's a tab at the bottom of their website. It'll be a tab down there at the bottom that'll say investor relations. Go in there and click on investor relations and then pull up their most recent financial statements. And then go to the balance sheet. Go to the balance sheet. And on the balance sheet, I want you to look at that balance sheet and look at assets versus liabilities and see what their net worth is. These guys are trillion-dollar banks, guys. I'm talking about multi-trillion-dollar banks. 15 years ago, all of them could have failed. But did they? No. Who saved them? 1%. 1% saved them. 1% saved them. 15 years later, you go and look at their balance sheet. They are worth trillions of dollars. That's why they can't let them fail. They let one of those too big to fail tier one banks go. That's going to cripple our economy. You can't let them go. Same thing with these multifamily oligarchs. Same thing with these national home builder oligarchs. Same thing with these institutional investor oligarchs. Same thing with these multi-billionaire oligarchs. Can't let them fail, man. They're not going to let them fail. In most cases. Now, they'll sacrifice one every now and then just to keep us on our toes, right? They'll sacrifice one. They're not going to sacrifice one of the too big to fail banks. None of them ain't going to get sacrificed. But they'll sacrifice a small one every now and then, right? They gave us a couple of them, right? They gave us a couple of them in 2000. What was that? Was that 22? Or was that early 23 when 2 or 3 of them banks failed? They weren't tier one banks, though, right? They weren't too big to fail, but they gave us a couple of them. Did you think if that was Bank of America or Wells Fargo or JP Morgan Chase or Citi or US Bank, they'd have let them fail? No, not when you got trillions of dollars on your balance sheet. Trillions and trillions, man. So they can't let them fail. They can't let certain companies fail. They can't, right? They'll broker a deal where someone buys them out, right? They'll broker that deal, right? Because even those banks that did fail, right? I believe it was 22 or 23, I can't remember. I got so much information in my head. But whenever they failed, they didn't really fail. What they did was the FDIC brokered a deal where another bank would come in and take up the assets and take up everything, right? And then the government would backstop the bank that bought them. So the government would come in and say, FDIC would come in and say, okay, here's the deal. All the toxic loans we'll take. You take all the good loans and you take all the deposits. We'll take all the toxic assets and we'll figure that out. And that's what happens, right? That's what happens in a lot of these acquisitions of these banks, right, that have failed. They don't just fail and close their doors and everybody lose their money. What happens is, now, if you're a shareholder, you might lose your money. But the deposits and the good loans, they give them to another bank. Now, that doesn't mean if you're an investor in that bank, you don't make no, you probably get left out. but the depositors don't lose their money in most cases. And good loans will be acquired by another bank because they're good loans. People are paying their mortgage or paying their, the loan payment, they're good loans. So that's kind of how it works in that world of finance when it comes to the big banks, right? But even in 2008, they gave up one, right? They gave up what, Lehman Brothers? They gave them up, right? They gave up a big insurance company too. So even in that, they had to give up a couple of them just to keep the American people on their toes, right? They don't want all us to realize it's a big Ponzi scheme, right? They don't want all us to realize that. So they basically say, okay, well, let's give them a couple. And that's what happened to Lehman Brothers. And I believe it was some big insurance company. I can't remember the name of the big insurance company, but that's what they did. They gave us a couple, but they didn't give us all of them, because all of them should have been gone. If you really want to be honest, all of them should have been gone, but they bailed them out. And guess who basically underwrote the whole thing? American people, because it's our taxpayer money that goes in to fund what? The government, right? Government collects taxes from us. They take those taxes and they use them to do what? Run the country, make decisions, boom, 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 right? But it's all connected, because the government, right? They collect what? This year, they're estimated to collect what? $4 trillion in taxes for 2023. Problem is, they got $6 trillion in bills. So this is a $2 trillion deficit. Where does that $2 trillion come from? Where did the $2 trillion come from? It comes from what? Treasury bonds, treasury bills, treasury notes, right? So the U.S. Treasury does what? They offer these investments to who? Investors. Hey, invest in the United States. We're going to give you a 2% return, a 5% return, whatever it is, right? That's what happens. And if they really get in trouble, guess what happens? The Federal Reserve just does what? They print money. Turn on the money machine, right? They turn on the money printer and they print money. They reduce interest rates and they print money, right? And people borrow that money. Companies borrow that money, right? That's what happens. So it's all intertwined is what I'm telling you, right? It's all intertwined. The only way we stand a chance in this country to build wealth is we got to know this stuff. We got to know it. We got to understand it. Because if we don't, we ain't got a chance against these folks. You ain't got a chance against these folks if you do not follow the financial breadcrumbs and act. You don't have a chance, because you can't trade time forever, guys. I'm telling you, you cannot work for these people forever. And even if you try to work for them forever, they're going to kick you out of there at some point. You're too old. We don't need you no more. Get out of here. Here go a little 2-week check. See you later. Thank you for the 50 years of service, right? And then they're going to give you Social Security. When you know Social Security is not going to be enough to take care of you guys when you get to the golden years. It's not. It was never intended to take care of you. So remember that. Do something to control your own destiny. Do something to control your own time. Don't work for these folks for the rest of your life. Don't stay on the hamster wheel for the rest of your life. Don't stay in the rat race for the rest of your life, right? Don't do it. Don't be blind to what's happening really in this country from a financial standpoint. Again, I'm not knocking it. I'm not saying anything's wrong with it. I'm a proud American. I enjoy living in America. I will always have a place here in America. But I also understand how America works. And the only way I get to control my stuff is by understanding how it works and making sure I carve out a piece for me. Because none of them are going to give me anything. No one's going to give you anything. No one's going to give me anything, right? So understand that. Be aware of that. And despite all of that, build wealth. Buy you some assets. The kind that generate income. The kind that generates income. Is it going to require you to give up something financially in the short term? Yes. Not going to sugarcoat it. It's going to require that you give up something in the short term, though. You're going to have to give up something in the short term to get everything you want in the long term. Yeah. Yeah. You got to give up something, guys. Right? There ain't nothing free. There's no freebies. No one passing out a $1 million check to you. It's not gonna happen. Nobody gonna mail you. No, no. They're not gonna send you nothing. They ain't gonna ACH you nothing. So you're gonna have to give up something financially in the short term to have everything you want financially in the long term. What do I mean by that? What do I have to give up? You're gonna have to live on less than what you make, right? You're gonna have to live on less than what you make, right? You're gonna have to live on a plan, a strict budget, a budget that does not include wants for a period of time, You're gonna have to stay out of consumer debt. Yep. You're gonna have to stay out of consumer debt. So you can't go to your favorite furniture store, can't go to Rooms to Go and get on a 24-month no pay, no interest plan, which is a bunch of hogwash. Don't go get on that plan, right? Oh, come on down here and get your $10,000 worth of furniture. You can pay us in 2026. Okay. Problem is when you get to 2026, you done forgot, you ain't got no money, and then they hit you with the 25, 30% interest rate, and now they done ruin your credit because you ain't gonna pay them. So you gotta stay out of consumer debt. And then you gotta save and invest. Those are the 4 things you gotta do, right? Those are the 4 things you gotta do. You gotta give up something to get something. I gotta give up impulse buying. I gotta give up buying things I don't need. I may have to give up vacations for a while. I don't know, man. Everybody got their own thing, right? You got to give up something. You're going to give up something today that you spend money on so that you can take that money and put it in assets so down the road you can have everything you want. But you got to give up something today. What are you going to give up today? What are you going to give up? Are you willing to give up getting your hair done every week? Are you willing to give up Sephora? Are you willing to give up Louis Vuitton? Are you willing to give up Gucci? Are you willing to give up Jordans? Are you willing to give up $40,000, $50,000, $60,000, $70,000 cars? I don't know. Are you willing to give up any of that stuff? Are you willing to give up going out to eat 7, 8, 9, 10 times a month? I saw one of my favorite cousins, and I ain't knocking on her, I ain't picking at her. she good folk. She's put a little thing on Facebook. They went to Ruth Chris, her old man, right? And I'm looking at the spread they had at Ruth Chris, and I know Ruth Chris, boy, ain't nothing to play with, boy. Them people put a dent in your head, nigga. They put a dent in your pocket, right? So I saw a little thing on Facebook, and I was like, only thing I could think about was, ooh, that look like that's about a 200. That's about a $200 meal right there, boy. That's the only thing I could think about. I was happy for them, but when I'm looking at the food and I'm thinking about Ruth Chris, I'm thinking, that got to be at least 200. That got to be a 200 right there. That gotta be. So are you willing to give up Ruth Chris? For those of you that know about Ruth Chris, that have them in your neck of the woods, are you willing to give up? What's my favorite restaurant in Louisiana, in Dallas, in Texas? Papados. That's one of my favorite restaurants in the world, right? Are you willing to give up Papados? Or whatever your favorite place to go that you'd like to go to? Are you willing to give up any of those things right now to get everything you want later? That's the key. Are you willing to do that? You got to ask yourself that question. Because see, financial freedom ain't gonna just fall in your lap, guys. It's not gonna fall out of the sky and hit you on top of the head. It's not gonna walk up behind you and tap you on the back of the shoulder. It's not gonna do that. You have to get out here and earn. Keep what you earn. And then multiply what you keep. And follow those financial breadcrumbs that the 1% drop for us. Because they're gonna tell you everything they're doing if you just pay attention. They're gonna tell you. They're going to announce it to the world if you just pay attention to what they're telling you, right? All you got to do is pay attention. And then you got to be decisive. You got to be decisive, guys. You can't be indecisive. See, a lot of us we see the financial breadcrumbs. We know what's happening, but we're indecisive. We're hesitant. See, we can't be indecisive. We got to be decisive. We can't hesitate. We got to go. You ever seen guys and gals who run these sprints, like the 100 meters or the 200 meters? You ever seen the like the competition at an Olympic level in the 100 meter? Just a small hesitation can mean what? You don't make the medal podium. Small hesitation. I'm talking about a milli hesitation. You do not make the podium. You can be the fastest person in the world, but if you hesitate 1 second, you don't make the podium. You don't get a medal. Same thing with building wealth, guys. We can have all the knowledge in the world. We can be ready. We can be in our stance. Hear that gun go. If we hesitate just a second, we're going to work for the rest of our life. Don't hesitate, guys. Be decisive. Come up with you a plan and execute that plan. Yes. Do we got to pivot every now and then? Absolutely. Absolutely. Pivoting is good for you, though. It keeps you on your toes. So it's okay to pivot when it's time to pivot, right? See, I'm the type of person, I'd rather be moving forward and make some mistakes while I'm moving forward, fall down, get back up. But I don't want to just stand still or walk backwards or go backwards. I want to always be going forward. If I fall down, boom, get back up. If I hit a wall, boom, bounce off of it, keep going, right? That's the type of person you got to be if you want to build wealth. You got to have that mentality, right? You got to have the mentality of the 1%. You ain't got to be the 1%, but you do got to have some of that mentality. It's one thing about the 1%, they don't hesitate. They're not indecisive. They're not afraid of taking risks. See, if there's no risk, there's no reward. The smaller the risk, the smaller the reward. The larger the risk, the larger the reward in most cases. You got to just figure out how do you balance that, right? You got to balance it. Everybody is going to be a different balance on the risk versus reward spectrum. Everybody's going to have a different balance. My balance is I'm willing to take more risks because I know what I need from a reward. But I may be different than the guy down the street. He may be willing to take even more risk than me. I ain't willing to go that far. But I've figured out my balance between risk and reward. And that's where I play, on that level playing field right there. I've balanced it out, and that's where I play. You got to figure out where your balance is between risk and reward. And I know a lot of you guys are brand new to investing. That's why you got to figure it out. And the first thing you got to start with is really, what am I trying to accomplish? I'm 40 years old. By the time I'm 55, I would like to have $1 million in my nest egg, right? That gives you 15 years to invest in something with your active income to multiply it, to turn it into $1 million. See, that's the first stage of putting a plan together. I can't put a plan together if I don't know where I want to end up. I can't put a plan together if I don't know where I want to end up, guys. So you need to know where you want to end up in order to put a plan together, right? You need to know where you're going to end up. Once you figure out where you want to end up, then you put the plan together to get there. I don't jump in my car and just start driving. No, I normally sit down and say, okay, Richard, where do you want to go? Okay, I want to go to Tampa, Florida. Okay, break out the phone. Let's see what route we want to take. Okay, I'm gonna take I-75. I'm gonna stop right here to get something to eat. I'm gonna gas up right here. Boom, I should get to Tampa in 2.5 hours. And then I jump in the car and I go. I don't just jump in the car and be like, okay, where am I going? I don't know, but no. I sit down and figure that out before I figure out where I want to end up before I go put the plan together. No different with financial freedom. I got to figure out where I want to end up, and then I put the plan together. So if I know I want to end up with $1 million in my nest egg, and I know I got 15 years to do it, the next step is to figure out how much money I need to invest and in what I need to invest it in order to multiply it to $1 million. Right? That's what you got to do. So then I would say to myself, okay, I got 15 years. All right. So if I could put $3,000 away for 15 years, $3,000 a month away, every month, so that's $36,000 a year for 15 years, 8% rate of return, that should give me what? That'll give me potentially my $1 million. Now, I don't have a calculator in front of me. I'm just giving you guys an illustration here. Okay, so now I just got to figure out how do I get to $3,000 a month? Okay, from my income I got coming in, minus my expenses, that leave me with $1,000 a month left. Okay, that means I got to get a secondary income for a couple $1,000s a month so that I can get my $3,000. I could do that every month, $36,000 a year for 15 years, 8% rate of return. Boom, there's my nest egg at 55. Boom, I'm on the beach chilling, never working for nobody another day in my life. That's decisiveness, that is planning, and then you just execute it. All right, guys, let me get out of here. My battery about to run dead. I'm about to shut down on myself. I've been on this thing more than 2 hours. I appreciate you rocking with me. Hit that thumbs up before you get out of here. You guys know I love you. I appreciate you. You've changed my life. I love doing what I do. I'm in my purpose. I'm in my passion, and I owe it all to you guys. So thank you for rocking with me. I appreciate you. Hit that thumbs up on your way out of here. Also, consider that Webull, up to 12 free stocks. When you try Webull, that's the brokerage app I use. Doesn't mean it need to be the brokerage app you use, but if you want to rock with me, you want to try it out, you want to get up to them 12 free stocks, hit that link down in the description box. Go get that thing, open it today, send me an email address down in the description box. Tell me you opened it, you funded it. I'm going to send you a Webull tutorial video so it'll walk you through how to do the basics to buy your assets, your paper assets. All right? So thank you for rocking with me. I appreciate you. Y'all have a wonderful weekend. I'm also see you tomorrow. Y'all know I'm back out here tomorrow giving you more information that you can hopefully use to get to your financial freedom. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next one. Peace.